Hello, and welcome back to Financial Market Insights for Traders. I'm your host, Sophia. Today on the show, we're unfolding the full spectrum of real estate investing basics in a comprehensive, friendly, no nonsense conversation. Consider this your ultimate beginner guide real estate investing episode. We cover why real estate matters, the core concepts you need to know, how public REITs work, what are REITs and how they work in practice, how to prepare financially and mentally, how to choose a path whether you prefer direct ownership or indirect investing, what tools and resources can empower you, pitfalls to avoid, and real steps you can take to begin your journey. Everything you need to feel confident and take action. Let's kick off by answering a question that every investor eventually asks: why real estate at all? Real estate has long been a foundational pillar of wealth creation and portfolio resilience. It delivers steady monthly cash flow through rental income, and at the same time tends to appreciate in value over time. Using leverage, you can control valuable assets with a relatively modest upfront investment. When inflation rises, rents and property values typically adjust upward as well, making property ownership a classic inflation hedge. Additionally, there are tax advantages built into real estate investing. Things like depreciation deductions, mortgage interest write-offs, and in some regions, capital gains deferment through exchanges. So whether you're chasing passive income, growth, or balance sheet strength, real estate can deliver all three, and it's been a proven vehicle for generations. Understanding the ways to invest in real estate essentially boils down to two pathways. One path is the hands-on route, direct ownership. That means buying and managing rental property yourself. Whether it's a single-family home, a duplex, multifamily building, or even a commercial unit. You deal with tenants, maintenance, insurance, financing, and all the everyday responsibilities. Exercises like screening renters, performing upkeep, collecting rent, and navigating legal compliance fall on you or a property manager you hire. The other path is indirect investing, an approach often more suitable for first-time investors. With indirect methods, you invest through vehicles like real estate investment trusts or crowdfunding platforms or syndications. There's very little day-to-day involvement. You simply acquire shares or units in professionally selected property pools and earn income without being a landlord. That brings us to a key topic: what are REITs and how they work? REIT stands for Real Estate Investment Trust. These are companies structured to own, operate, or finance income-producing real estate. Everything from apartment complexes to retail centers, offices, data centers, or industrial facilities. What makes REITs particularly appealing is that they are required by law to distribute at least 90% of their taxable income back to shareholders in the form of dividends. That means you receive regular income without needing to sell. Public REITs are traded on stock exchanges, giving them liquidity. You can buy and sell shares like you would with any publicly listed company. That accessibility, the relatively low minimum capital needed, and the diversification they offer make public REITs a strong entry option for those asking what are REITs and how they work. There are private, non-listed REITs as well. They often require higher minimum investments, have less liquidity, and sometimes pursue niche strategies. But for beginners, public REITs provide an efficient, transparent, and scalable way to gain exposure to real estate without taking on property management yourself. Before you launch into a real estate investment, it's vital to prepare wisely. First, clarify your goals. Are you aiming for steady monthly income? Are you prioritizing long-term growth in equity? Do you want tax efficiencies to enhance net returns? How long do you plan to hold your assets? 5 years, 10, 20, or more? Next, take stock of your financial foundation. Do you have high-interest consumer debt you need to reduce? Have you built an emergency fund covering at least 6 to 12 months of essential expenses, especially critical if you're going to own property? What capital is available and what can you comfortably leave invested without causing cash flow stress? Finally, consider your risk tolerance. If rental income drops, property values dip, or financing rates rise, will it unsettle you? Or can you stay the course through cycles? Clarity around these factors will shape the real estate strategy best aligned with your circumstances. If you gravitate toward active ownership, there's a sequence to follow. Begin with market research. Study job growth, population trends, rental demand, amenities, school quality, vacancy rates, and local development. In other words, you're buying not just a property, but a local economy. Once a neighborhood or city area shows promise, analyze potential properties in depth. Project all expenses, taxes, insurance, maintenance, property management fees, if applicable, and then project realistic rental income based on comparable rents. Use those numbers to calculate net operating income, cap rate, and cash on cash return. Understand how financing affects cash flow and equity accumulation over time. When financing comes into play, explore options like conventional mortgages, government backed loans, if available, or private lending. Know the terms, interest rates, amortization schedule, down payment requirements, and what happens if interest rates shift. Decide whether you will self manage or hire help. Managing turnover, repairs, tenant disputes, and the administrative side of paperwork all take time and mindset. Once you've completed one property, many investors scale up, often leveraging equity through refinancing or reinvesting rental cash to acquire additional properties. A common approach is house hacking, living in one unit while renting others to reduce your own housing costs while building equity. On the other hand, if you prefer simplicity and lower operational complexity, indirect investing may be your route. That includes investing in public REITs, real estate exchange traded funds, or real estate crowdfunding platforms. Many crowdfunding opportunities allow you to start with as little as $500 to $1,000, giving fractional ownership in commercial or multifamily assets. This path offers yield, exposure, and portfolio diversification without tenant responsibilities. It's ideal if you want to be an investor but not a landlord, giving you time to learn and grow before potentially transitioning to ownership later. Now let's cover tools and ongoing education. In today's fast-moving financial world, having the right platform matters. If you're tracking REITs, analyzing macro trends, or building an equity portfolio, you'll benefit from a modern, intuitive, and comprehensive platform. The Crystal Ball Markets trading platform fits that mold. It's a world-class, cutting-edge, user-friendly tool that gives you access to analytics and real-time insights in one place. If you'd like to explore it, you can sign up at crystalballmarkets.com/platform. And if you enjoy audio learning, podcasts are a convenient way to absorb investment ideas on the go. One highly accessible resource is the Crystal Ball Markets podcast itself, beginner-friendly and focused on trading, investing, macroeconomic themes, and market trends explained clearly. To jump in, head over to our ss.com/podcast/crystalballmarkets. It's an excellent complement to build your foundational knowledge. Without simplifying too much, we can compare different real estate approaches. Public REITs require minimal capital, offer high liquidity, and are low in operational burden. Crowdfunding gives you real estate exposure with moderate liquidity and generally higher targeted yields. Direct single-family rental ownership demands significantly more hands-on management, higher capital, and lower liquidity, but gives you full control and cash flow. Multifamily or commercial ownership ramps up scale and return potential, but also increases complexity and capital requirements. Each path carries risk and reward, and you can combine or pivot between them as your comfort and experience grow. It's also critical to understand and avoid common pitfalls. Never underestimate the true costs: maintenance, taxes, insurance, vacancy periods, turnover costs, property management fees, and unexpected repairs can chip away at cash flow. Be cautious about over-leveraging. Too much debt may amplify short-term gains, but also expose you severely if income drops. Avoid emotional decision-making driven by hype or fear. Use data and perform conservative analysis. Understand the tax treatment of rental income, depreciation. Are EIT dividends treated as ordinary income or potentially eligible for qualified dividend treatment, capital gains rates, and applicable deductions? Finally, commit to continuous learning. Markets shift with interest rates, regulatory changes, demographic trends, and macroeconomic cycles. Stay current. In closing, real estate investing basics aren't out of reach for new investors. With this episode acting as your beginner guide real estate investing foundation, you now better understand what are REITs and how they work, the difference between active and passive pathways, how to prepare financially and mentally, what tools and resources will support you, and how to avoid common traps. If you're ready to take control of your investing journey, I encourage you to explore the Crystal Ball Markets platform. It's world class, user friendly, and equipped with analytics to help you research REITs, ETFs, equities, and macro trends in one place. You can sign up at crystalballmarkets.com/platform to get started. For continuous learning and market insights, the Crystal Ball Markets podcast is also a resource tailored to beginners and intermediate investors alike, covering trading, investing strategy, and macro markets in clear language. You can find it at our ss.com/podcast/crystalballmarkets. Thank you for tuning into this episode of Financial Market Insights for Traders. I'm Sophia. Invest wisely, learn continuously, and build momentum steadily. Until next time, keep exploring, stay curious, and let your financial journey unfold with clarity and purpose.